Morning, everyone. Economic Ninja here. I hope you're doing well. We're going to talk about Amazon. We're going to talk about Target, and I've got a couple of other stories about the business cycle that is coming apart. Amazon has just unveiled that it is allowing businesses to pay later for goods. It is a amazing bit of truth that shows and it proves that businesses do not have money going forward. They are not paying with profits, they are paying with credit. Target also is unveiling, the CEO unveiling the truth about the consumer, and it's getting bad. It's actually really bad. And then we have stories from Peloton and more than that. Also, right after this, I'm going to be jumping over to the Real Estate Ninja channel and doing some stuff with mortgages that are, quite frankly, pretty amazing. It's exciting. These calls that I made a while back are happening, and it's quite frankly an exciting time to be alive because there's no way that I can see us being able to level up as Americans and build that wealth when unless there's a crash. So let's dive right in. Let's start with the Amazon story. Amazon, this is out of CNBC, just came out. Amazon unveils buy now, pay later option with a firm for small business owners. It says that Amazon is unveiling its first ever buy now, pay later checkout option for the millions of small business owners who uses its online store. CNBC learned exclusively. The tech giant confirmed Thursday that its partnership with a firm is expanding to include Amazon Business, the e-commerce platform that caters to companies. Amazon shares jumped more than 14% on the news. Blows my mind every time that stock traders are super excited about this. Yeah, they're excited because it's going to draw in more business, but what type of business is Amazon going to get? Well, they're going to get businesses buying their goods on credit, which is going to cost the business even more money because of the fees and interest that they're going to have to pay. It says the service with loans ranging from between, and remember, these are loans, ranging from $100 to $20,000 will be available to all eligible customers by Black Friday or November 24th. It is specifically for sole proprietors or small business owners by a single person, the most common form of business ownership in the US. Please, I teach this in my side hustle, how to start a side hustle course, which I take people from garage sales to corporations. I teach this like crazy. You are dancing with the devil when you are building your business on debt until you get to a certain point where you're leveraging and you have enough cash flow coming in, and there's certain ways to tell if that is going to be a bonus, a benefit for you, or a detriment. And now think about this. This whole program is built for sole proprietors, which means these are people that start businesses without a legal entity. They are taking out this debt with their social security number. This is financial suicide if your business flops, because now you are on the hook to start. And I teach this in the course, and this isn't to teach the course, but this is very serious. A successful business person uses debt the right way, and one of the right ways they use debt to make themselves money is they use it in a legal entity that they run, that they manage. Then you're using an EIN number or a TIN number. An EIN is best, but that's what the debt is tied to. It's not tied to your personal name. It's not tied to your credit score. It's not tied to your social security number. The truth is, nobody really teaches this on the internet because it's not sexy. And because, just like this story said right here, this is these are small businesses owned by a single person, which is the most common form of business ownership in the United States. That's where a lot of authors know they sell more books to these type of people, and they're running themselves into financial suicide. And let me give an example. In 2008, the reason why we have any kind of crash is because the masses build up and then everything falls down, right? Because they didn't see something coming. Well, the other reason why when everything falls down, it's because there's no buyers to buy certain types of goods or services because their credit's been shot. Now look at this. Amazon is catering to the most amount of business owners out there. Those are people that use their social security number. And I think it's very important for people to understand this, because that's why I'm trying to prepare you for this crash. And the most important thing you can do is to protect your credit score. Because so many people ask me this question: Ninja, how am I going to buy a house when everything's falling in value? Because, and I don't have a lot of money. How much money do I need? The truth is, you only need a little bit, but you need that credit score to be able to go out and get those debts, those proper debts. And then you form those entities, put them in there, and then the entities start to take out loans. Now check this out. It says, it's the latest sign of the widening adoption of a fintech feature that exploded in popularity early in the pandemic, along with the valuations of leading players Affirm and Klarna. When boom turned to bust in 2021 and valuations in the industry dropped steeply, skeptics pointed out to rising interest rates and borrower defaults as hurdles for growth and profitability. But for users, the option is touted as being more transparent than credit cards because customers know how much interest they will owe up front. That's made its appeal durable for households and businesses coming under increased strain as excess cash from pandemic stimulus programs have dwindled. What's going to happen with all these business owners as they try and buy things on credit? They go and buy things, they get themselves locked up in these loans, and then they try and sell to a consumer that's completely broke. Well, the truth is the business owner is still on the hook. Now let's dive into the next story. Let me get some water real quick. We're going to dive into the next story about Target. And the reason why it's important is because the CEO made a very serious warning. Let me ask you this. How many people here own a business, whatever type, C Corp, S Corp, an LLC, S filing, a sole proprietorship? Let me know. Type 1 down below. I'm just curious how many people we have in the chat room right now that own a business. All right, so let's do this. We're going to dive into this Target story, and I think it's extremely important. Cool. Out of the people that own a business, they're typing 1. How many of you have an LLC or some type of entity protecting yourself and your family? And so many people think that an LLC is just simply protection against people that would sue you. This is protection for your credit score as well. I think it's very, very vital. As a matter of fact, I'll put a link. No, I can't do that right now. Let me get into this Target. I apologize. My mind's spinning. It's not a CNBC as well. This story just came out an hour ago. Target CEO says shoppers are pulling back even on groceries. That's a big deal. All right, we've talked about this effect coming where they can't afford certain types of foods, the more expensive foods. They're pulling back. Ironically, people that do that, when they start to pull back from Walmarts and Targets, they're going, and I've done stories back in June where Target shoppers became Walmart shoppers. And that was a big sign because they were pivoting away from a higher end store to Walmart, and they're pivoting because they don't have the money. All right. And this is yet another sign that is happening. The consumer is dying fast. It says Target CEO Brian Cornell says shoppers are pulling back even on groceries as they feel stressed about their budgets. In an interview with CNBC's Becky Quick that aired Thursday morning, he emphasized that the retailer has posted 7 consecutive quarters of declining sales of discretionary items, such as apparel and toys in terms of dollars and units. Now, let me just say this also. Target also made a fatal error, and I reported on this when they went woke and they bought into all this crap, and they were, pushing an agenda on our children. And so I believe that is also 90% of what's going on here, okay? And I'm all for it. I do not shop at Target. But the food is interesting because those numbers are still based on the people that walk in the door. They have that data. It says here, but even food and beverage categories over the last few quarters, the number of items they're buying has been declining, he said in the interview. With the comments, Target doubled down on a cautious outlook as it gears up for the crucial holiday season. The retailer cut its full year's sales and profit expectations in August, despite a growing number of economists delaying or scrapping calls for a recession and government data showing that inflation is cooling. I do not believe inflation is cooling one bit. The company is scheduled to report earnings on November 15th. Cornell said that the company has faced a turnabout from previous holiday seasons during the height of the COVID crisis. It didn't have enough merchandise because of pandemic-related supply chain bottlenecks. Then a year ago, it coped with too much of the wrong inventory. I believe that the Target CEO is coming out right now and talking to CNBC about 2 weeks prior to its earnings call coming out, because the earnings are going to be abysmal. And what they're doing is they're trying to prepare investors. And so they're going to try and do things where it looks bad and then all of a sudden it upticks. You know, when you adjust your outlook really low and then all of a sudden it comes in a little bit above, but it's still really low compared to what it should have been or what they expected it to be 3 months ago, 6 months ago. That is that whole bad news is good news, because it's not as bad as they said it was going to be when they really revised it lower. Now, this is another story that I think is really important to go over, and this is out of Zero Hedge. It's entitled "Warnings on Weak Demand Are Piling Up This Earnings Season." Excuse me. It says more companies are flagging concerns over the looming threat of an economic slowdown this earnings season, striking a cautious tone. At just over the halfway mark of the reporting period, weak demand is among the top trending phrases on earnings calls, according to a Bloomberg analyst of transcripts for the S&P 500 and the Stocks Europe 600 benchmarks. If the pace of mentions holds for the next few weeks, it would be the most on record, according to data compiled by Bloomberg going back to the year 2000. This is a big deal, and it's exciting to see because we've been getting ready for this. And when you get ready for this and you see it coming to full fruition, then you have more boldness to step out and make those, do what is not fun, to prepare harder, to your dreams get bigger, your goals get larger. I think this is absolutely amazing. And I think that this Christmas season, we're going to see earnings that are coming out where they're saying this is the worst Black Friday, or this is the worst, not Black Friday. Black Friday numbers will be good. But I mean, the overall Christmas buying season, I think you're going to see more and more people spending less. And so it'll become one of the worst Christmas seasons for retailers in recent history. It says the flagship companies have warned about the outlook in numerous sectors, including Meta Platforms, Worldwide SA, Ericsson, Alstom, FMC Corp, all these, Pfizer and all these other companies. Aggressive rate hike campaigns from major central banks to tame inflation are taking a toll on the economy, reducing demand and raising financing costs while pressuring valuations. The situation is more pronounced in Europe. Remember, Europe's going to crash before us, where PMI data has been weak and shows no sign of recovery. On a side note, the European Central Bank has held rates again, and that is that maximum pain, the plateau that I've went over in so many videos with charts. That is where the Federal Reserve is about to get. We've got probably a couple more rate hikes ahead of us. And then they're going to hold that maximum pain, and they're going to let the economy collapse. And then it's not going to look like it's their problem, but they have just a little bit more to do, and then they're going to hold those rates at maximum pain. And you are going to see the consumer continually fall off the cliff. It says corporate sentiment on economy and outlook is downbeat. Barclays strategist, led by Emmanuel Cao, wrote in a note tracking earnings, and he says our analytics of transcripts from Stocks 600 firms have reported thus far reveals that a majority are incrementally negative on the economy compared to recent quarters. It says here, Caterpillar stock slumped Tuesday on signs of slowing demand for its iconic yellow machinery, while Volkswagen's earnings miss raised further concerns about consumer confidence after Tesla's grim earnings report last month. You know, Caterpillar is such an amazing bellwether for the productivity of the world. And when Caterpillar's stock slumps because of their information of how many pieces of equipment they've sold to China, it really paints an amazing picture of how this downturn is taking grip. And it's going to be a big one. Europe, it says, is facing another worrying trend, according to BofA's analyst Andreas Brunker, who flags that only 34% of Stoxx 600 companies have beaten on sales so far, the lowest level since the first quarter of 2014. Remember, that's when Europe was going into a massive crisis, and well below the long run average of 52%. The fact of the matter is that Europe is starting to crash. They are already holding their rates. They are already starting their maximum pain level. We're about to, in about a couple of quarters, we're going to hit our maximum pain in 2024 will be maximum pain. And it will lead to one of the greatest buying opportunities in history. I put a couple of links down to 80% off for the How to Start a Side Hustle course and the real estate course. I thank everyone that supports this channel by hitting the subscribe button. I'm going to move over right now to the Real Estate Ninja channel, and I am going to be talking about, check this out. You love this stuff. Unseasonable housing market trends emerging this fall, and home prices falling further. And we're talking about the entire country. We're talking about the median home price. You know, what everyone says isn't true, it's actually happening right now. So you better start getting ready. All right, with that being said, the Economic Ninja is out.